Everyone. My name is Muskan Arora, and I'm a reporter at Markets Group. As investors and fund managers gravitate towards investing in AI, we have one of the top leaders of the industry today to talk with us about investing in AI. Please welcome Stephen Meier, the Chief Investment Officer of $278 billion New York City Retirement Systems. Welcome, Stephen.
Thank you. It's good to be here.
I really wanted to understand about the areas that you see promising or developing in the next 5 years in AI.
Well, if you look at artificial intelligence, it's actually been around for a while. I'm told in a number of decades versus years, but I still consider it a somewhat nascent technology, but rapidly developing. We actually look at this as being a transformational technology, which will have broad implications for investors, for the economy, for society as a whole. It's actually one of the key themes that we have, Muskin, in terms of what we think will be significant over the next 10 years in terms of driving gross domestic product growth, impacting inflation, impacting productivity, and ultimately impacting government spending and private investment. So a number of those things include, say, decarbonization, demographic changes and the impact on the labor force and labor force dynamics, debt sustainability in terms of sovereign debt levels that are out there that are very, very high at this point. Also, I'd say, again, digitization or transformational technology as it applies to artificial intelligence, deglobalization or nearshoring or friendshoring or onshoring. And lastly, all this is wrapped in a geopolitical change dynamic that we think will, again, those are the things, we're not thematic investors, but those are the themes that we think will drive the investment landscape over the next 10 years. So again, artificial intelligence, we believe, is a transformational technology that will have broad implications, and it touches every aspect of our public and private holdings at this point. I'm happy to go into that in some detail.
Yeah, absolutely. That sounds really fascinating. Before we dive deeper into that, I really wanted to also understand that while decision making, are there certain activities that you think that AI would be best suited to help you with?
I obviously look at artificial intelligence in terms of how it's impacting our portfolio, what the opportunity sets are, both in public and private markets. We are also developing a use case in terms of how we can deploy artificial intelligence within our own offices to be more efficient, to use it for to support writing, data analysis, to improve our performance in terms of our quantitative system development. It's a wonderful tool in terms of its pilot capabilities, in terms of helping with programming. So those are some of the low-hanging fruit that we see. But again, as I said earlier, Muskin, it's still nascent technology. We think it has an enormous potential impact. There are obviously a number of different paths that the development, deployment, and use of artificial intelligence can take. Those are broadly quite uncertain, but we are certain about the fact that there will be a significant impact on what we do, how we do it, and how our portfolios perform, frankly.
Yeah, absolutely makes sense. And what approach are you taking when it comes to investing in AI? Like both investing in AI and using AI? Like you spoke a bit about it, but I'd be happy for you to go deeper.
Sure. So when I think about investing in artificial intelligence, there's two aspects of it: directly investing in artificial intelligence related companies, but perhaps more importantly, more broadly, the way it touches our portfolio, Muskin, is in the picks and shovels element. Those activities, those asset classes, those sectors that are on the edge of artificial intelligence that are being significantly impacted. We see a number of things that are being touched at this point in terms of the use of energy and the impact on utilities, the impact on data center development. So it's interesting, artificial intelligence uses about 10 times the amount of energy through its data centers to support artificial intelligence operation. So we do think that's another area where we're investing through either real estate or through infrastructure in the private market sector, strategies that can, say, support the development of data centers for various users as tenants, that we think will be very promising. We also look at how the fact that those data centers will need to use a lot of electricity. And certainly that's a big part of leveraging the initiatives around clean energy. Also midstream data in terms of midstream infrastructure in terms of, say, gas pipelines and the like that are considered not necessarily dirty technologies, but cleaner fossil fuels as we work through that transition to a clean economy, to a clean energy source. I'd say other things, just software companies, both public and private, that are in our portfolios are obviously dramatically impacting are being impacted by the development of artificial intelligence and the deployment of artificial intelligence. So it's everything. It's everything in the public sector. It's everything in the private sector as well in different forms, direct and indirect. But let me answer the question this way. So I did a quick query a little while ago, just in terms of our holdings or aggregate holdings across the 5 plans in 6 companies, those being Google or Alphabet, both their A and C shares, Amazon, Apple, Meta Platforms, Microsoft, and NVIDIA. And our current holdings as of last night were a little over $15 billion in assets just across those 6 stocks. And again, that's off of a $278 billion asset base. So we've seen some really nice growth there. I think at last look, NVIDIA is a $2.8 trillion company, and the others are also quite substantial in terms of their size and impact on the market. In the U.S., I'd say as a general matter, we're more of a passive investor, although we do have about 25 or 30% of our assets in active strategies. We're a little bit more active in the developed market ex-US and emerging markets. And there we see significant opportunities to invest in companies that also on an active or passive basis that touch artificial intelligence in different ways. I should also mention the data set and development is not just here in the United States, it's in Europe and Asia as well. And we're investing in those technologies through, again, real estate and infrastructure development products.
Any particular regions that you could highlight in Europe and Asia where you're looking at investments?
No, it's pretty broad. I mean, it's pretty broad in terms of the demand. I mean, the demand for artificial intelligence technology, artificial intelligence related data centers, and how that impacts the need for higher levels of energy, be it more fossil fuel related or hopefully more clean energy or sustainable energy sources. That's broad around the world.
I completely agree with you there. And I think it's a very similar market sentiment right now that everybody is looking to invest in data centers through real estate and infrastructure.
Yeah.
So that's great. I'd also want to know, why do you think this is a good time to invest in AI considering other market variables?
So as a general matter, we're more strategic in our investments. We're not tactical. It's really hard to be an institutional investor of our size and scale, Muskin, to be in and out of the markets or be tactical. Yeah. So we have a long-term strategic asset allocation. We're in these markets for consistent, for years. We're active owners, even though we may have a passive investment through, say, the S&P 500 index. We vote all our proxies in-house, so we're consistently engaged. And again, we think broad exposure to those economic drivers over time will make a difference in terms of our portfolio returns. But again, not tactical. We're not looking at valuations, which I believe are a little on the elevated side, particularly as it applies to artificial intelligence. But again, the deployment is and the path of deployment is still somewhat uncertain in terms of how it will impact the underlying companies that actually use artificial intelligence to improve their productivity, to reduce their cost structure. And as I said, all that's still playing out in the economy and in the marketplace.
Absolutely. And which sector and subsectors are you focusing on in AI?
So the sectors and subsectors, I'd say directly. I mean, obviously we at either passive index weights or through active strategies, we have significant investments in, say, chip technology, software companies, some of those other companies such as an Amazon or an Alphabet that actually leverage artificial intelligence for other reasons to leverage their business and be more effective in delivering services to customers. So again, it's direct and indirect. And as I said, again, good old-fashioned picks and shovels. We invest in the infrastructure that supports artificial intelligence through, again, the data center investments as well as clean energy.
Absolutely. And what are the challenges do you think that allocators will face when investing in AI?
Well, for us, it's pretty straightforward. Again, we're an allocator, but we're not a market timer. We believe that
Hmm.
you get better results at our size and scale of having time in the market as opposed to market timing. So again, we're a consistent investor over time, and again, we're not tactical, and we're not in and out of opportunities by
Hmm.
design.
Makes sense. And are there any emerging markets and emerging managers that you're focusing on with AI? I know you briefly
Well,
spoke about emerging markets, but I'd love to dive deeper.
yeah, not necessarily directly. So we have emerging market equity positions. We actually invest in private equity. We invest in global infrastructure. We invest in global real estate opportunities that will have different elements that will touch either software or chip
Hmm.
development or data centers or sustainable energy infrastructure. So I don't know if that's answering your question appropriately, but again, we're a U.S. Domiciled fund. We have about 84% of our assets embedded in U.S.
Hmm.
Investments and strategies, but again, 16% of our assets are abroad, and that's closer to 40 plus billion dollars in assets we have that's deployed elsewhere to take advantage of those opportunities.
Absolutely. And with the geopolitical tensions in China and China being known for chip making, how are you handling that 14% bit of the portfolio?
Yeah, I'd say it's more Taiwan that's known for the chip making. There's a lot of infrastructure built up there. I know NVIDIA has its chips made by a manufacturer that's physically located there. There has been, as I mentioned earlier, some significant um, movement to let's say shore up supply lines by
Hmm.
bringing production closer to home. So those technologies, I mean, even look in the States with the CHIPS Act, there's a lot of development of technology and infrastructure
Hmm.
here in the United States that can ultimately support and feed the artificial intelligence initiatives, as well as a good and a stable source of energy, which I think is very, very important as well.
And how are you assessing these opportunities in artificial intelligence? Like you can perhaps also talk about managers or consultants that are helping you out.
Yeah, so we don't necessarily we have a number of we have each of the five plans that we manage has a general consultant, but we
Hmm.
also have a number of specialty consultants that specialize typically in non-traditional or alternative assets. Again, I mentioned private equity, infrastructure, core, non-core real estate, hedge funds for two of the plans, as well as private credit. We're big investors in private credit. And we do think there's a significant opportunity to invest in debt strategies that support the development of that critical infrastructure. So again, in terms of our use of consultants, it's not specifically, can you help us invest in artificial intelligence, but a lot of the deals that are getting done now in, say, software, somehow in many ways touch private equity. I believe the statistic is something like 98% of all software companies are private. So we
Yeah.
have those investments into private software companies, again, through our private equity initiatives. And we do look at the performance drivers, the sector allocations, and the focus areas of those managers. So that's something that makes
Absolutely.
it attractive for us.
Yeah, absolutely. And my next question was very similar about, how is AI interacting with private equity and private investments? So could you expand a bit more on what you find attractive and what you think is going to happen in the next 5 years with this interaction of private equity and AI?
Well, again, it's a nascent technology. The paths of how it's going to be developed and deployed are uncertain. But I can say with humility and confidence that this is a transformational technology. It is changing the way we think, the way we function, our opportunity set from an investment standpoint. It's actually picking up speed as well through the deployment
Hmm.
and development of artificial intelligence throughout our society and through the companies that we invest in. So again, an uncertain outcome, but a technology with, I think, just tremendous potential for positive
Hmm.
impacts in terms of just look at the impact of artificial intelligence on the broader global economy. We think it is going to, contribute to GDP growth around the world, anywhere between 1 and 1.5%. We think it'll have a deflationary 10 or disinflationary 10, meaning moving the level of inflation a little lower. And we think it's positive for productivity. We also have to recognize, though, that there will be some social dislocations, at least early on, in terms of people that are displaced from their jobs, as associated with an increased use of artificial intelligence that really lends itself to supporting and actually even producing more knowledge work. So I do think this is will probably be more of a challenge for white collar workers. It's not to say that they can't be retooled to still be actively part of this expanding economy, but in a different capacity.
Really makes sense. So are there any sectors in private equity or any strategies in private equity that excite you the most about AI, like when it meets AI?
Well, buyout and growth, we certainly think that we'll see a consolidation in software companies, again, that occurs over time. As I mentioned, 98% of all software companies are private. So there's always a lot of activity in those areas. And software is something that can typically have a significant amount of positive leverage because the technology, once it's developed, it's obviously easier to deploy, and the margins are pretty significant there. So again, I'd say just looking at our traditional private equity managers that look for strategic fit to drive process efficiencies in those companies. But again, growth and buyout seem to be really the beneficiaries. I suspect also we're a very small investor in venture capital, but I suspect over time that will be a significant area of opportunity as well.
All right. And I am very curious to know that are you allocating, are you keeping a separate amount for allocation for AI? How are you keeping that allocation amount for AI?
No,
are you just mixing it?
Yeah, we're a traditional institutional investor. Everything we do is professionally managed. Again, we don't time the market. We're a consistent investor. We adhere to a strategic asset allocation plan. We deploy money, say, into the private markets, which we're in the process of increasing our exposure to over a period of time to make sure we get vintage year diversification. Again, we're not tactical. We're not in and out of the markets. We're not specifically targeting any managers that are only somehow impacting artificial intelligence. But we have, as I said, significant public stock holdings as well as private equity holdings in either chip companies or software companies that will benefit from or are involved in the development of the technology. And again, all those adjacencies, all those companies and industries that are at the edge of artificial intelligence and somehow support the delivery of artificial intelligence benefits over time.
That absolutely makes sense. And what I also wanted to know, how are you assessing managers when AI has come into place and they need to tactically allocate money, be more tactical about it? So how are you allocating, assessing managers? Could you highlight a few red and green flags?
Yeah, so that's a great question, Muskin. So in every meeting we have with external managers, I always ask about their approach to artificial intelligence. How is that impacting their business? How is it impacting their business in two ways? What's the impact on their opportunity set as we move forward and with the development and deployment and use cases for artificial intelligence? And how are they using it internally? And some of that's a little self-serving in that we're trying to come up with a strategic plan of how we can incorporate the use of artificial intelligence. Again, protecting confidential information, making sure that nothing about our portfolios are out in the general cloud or available for general access. So we want to be careful about confidential information. We want to be respectful of intellectual property rights out there. So we're still going through that exercise. So I can tell you that almost all of the people, the investment professionals I have the privilege of working with here at the Bureau of Asset Management use artificial intelligence in some way. A lot of that is simple chat GPT 4.0 in terms of how that works. A lot of that work is done in their private computers just to make sure that we don't in any way jeopardize the confidential information we have within our operating group.
Absolutely. And what are the few red flags that you've come across, like something that you stay away from or is a no-no in terms of assessing and selecting managers in the
No,
recent times?
again, we don't use artificial intelligence as a specific screen. We do ask the
Mm,
questions to see how the technology is being deployed and used. We're curious about the potential impact on our portfolio companies in particular from an investment and return standpoint, um, and how this potentially impacts risk associated with those
absolutely.
operating companies. So no, we don't necessarily focus on specific use cases, but
Mm,
we ask everyone in terms of what they think the potential is for artificial intelligence and what's the path over the next 3 to 5 years. I do think that the world will look different in 5 years than it does today. And I do think that the deployment of artificial intelligence will certainly surpass and exceed that we saw in terms of the use of the internet. And obviously, we
mm,
had a little bit of a questionable track record an industry and as a marketplace back in 2000, 2001, where things had gotten to such an excessive level in terms of just a bubble in internet-related companies. The difference today is that these companies, pick on NVIDIA in particular, they are a
mm.
tremendously profitable company generating just enormous levels of free cash flow that can be reinvested in the business or distributed over time. So those are real companies with real earnings, and the growth trajectory has been just incredible. So we're optimistic, also recognizing that the valuations have gotten probably to relatively high levels. I think perhaps they were a little higher last year than they are today, but certainly something to watch. Um, Not something to necessarily take action on. We're not going to disinvest or divest from any artificial intelligence or chip companies because we think that the valuation is too high. But I think it's not unreasonable to expect some level of volatility over time. I also think, as a general matter, Muskin, we're going to see the level of right now the real benefits of artificial intelligence in terms of, and from an investment and stock perspective. On a direct basis, are concentrated in a handful of companies. We talked about a few of them earlier. I do think you'll see a broadening out of the positive impacts of artificial intelligence throughout the market over time. We really haven't seen that yet, but I do think it's something that's reasonable to expect, and that will come over time.
Absolutely. And one last thing, which I'm personally very curious to know from you, how do you think climate technology and AI will meet together? And what do you think that is going to happen in that sector?
Well, I think that's a wonderful, wonderful question. So, well, maybe look at it this way: from a climate sustainability
Mm,
issue, we need just enormous amounts of energy to be
mm.
able to support the functioning of artificial intelligence at the data center. So we think
Yeah,
that's a positive impact, that there'll be more, hopefully more focus on, well, probably traditional, but also non-traditional sources of energy, which we think will be positive. I'm sorry, what was the second part of your question, Muskin?
so I just wanted to know how they would be interacting together because, like, I
Yeah,
understand that AI requires a lot of power, a lot of water, and all of those
yeah,
things. And
yeah.
how would that interact with the ESG? It's like
Well,
crazy.
the chip technologies, chip generation requires a lot, with clean rooms, cold rooms, a lot of
Yeah.
water, as you said. And I do think the current administration, Joe Biden's administration, has done a very good job in terms of the CHIPS Act, the Infrastructure Act, the Inflation Reduction Act, in terms of putting more money into our local economy to develop
Hmm.
those manufacturing and industrial base that we really think is important. And again, to mitigate the risks of supply chain disruptions down the road. And again, perhaps there are some national security issues associated with those changes as well, which we view as fairly positive. So that's the interaction. Now, in terms of how we think we can use or artificial
Hmm.
intelligence will be used to improve our performance around sustainability issues. I had a meeting earlier today with an investment manager, a world-class investment manager, that actually showed me a quick example on their laptop of how they were able to use artificial intelligence to develop a prototype of a hotel located outside the United States that was energy efficient in terms of how much windows it needed, what level of heating and
Hmm.
ventilation was required, and actually artificial intelligence, and for very little money, can actually generate a complete analysis in terms of how do you build sustainable infrastructure, what the cost is, what it thinks you need in terms of ordering. So it actually will automate that whole process and perhaps speed the process of development. And this was just an example of how their architects use artificial intelligence, again, to improve the delivery of building properties, either hotels, office space, multifamily housing, et cetera.
Oh, yeah, that absolutely makes sense. I think that was a very good point of view of like measuring windows and understanding how much of that is required. That was really fascinating. Just one last question. I just really want to know what keeps you up at night in terms of like investment and thinking about AI. What is something that you're constantly thinking of?
Well, I'd say my only concern would be to miss the opportunity, and there's probably two ways to answer that. To make sure we're getting good relative values, we continue to deploy capital into those areas. Again, not just as a public equity holder and a big investor in say passive and active strategies, but when we deploy money into private markets, are we really taking advantage of the opportunity from, again, picks and shovels, infrastructure, sustainable energy initiatives, and the like. I really don't lose a lot of sleep because the things that I would lose sleep over are probably out of my control as an investor, as an institutional investor. But again, I think we've done a wonderful job in terms of building all-weather portfolios that will hopefully perform consistently well over a long period of time. The last point I would make is that we are long-term investors. I'm not looking at the next quarter or the next year, even the next 5 years. We're thinking about what are the dynamics in the marketplace and what are the opportunities that are going to drive our investment performance in 10, 15, 20 years. So really to try to match the time horizon for investments to the liabilities or the promises we have made collectively to the pension plan beneficiaries and participants.
Wow, that's brilliant. I'm glad you don't lose sleep. That's the best part of it.
But again, just to reiterate, we think this is one of those 5 or 6 long-term trends that is really going to have a positive and profound impact on not just our portfolios, but on society in general. So it's something that we pay a lot of attention to. And we're watching the deployment of these opportunities with anticipation and great interest at this point. Thank you so much.
Thank you. It was lovely.
Take care, Muska. Nice meeting you.
Yeah.
Bye.
Take care. Bye.